this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 7th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. So I have quite a lot to cover today. It's probably going to be a relatively long video, so stay tuned. Lots of good information, especially at the end. Very interesting patterns in precious metals and dollar. Very interesting pattern in natural gas as well. We'll look at S&P 500, which is basically defying any kind of economic outlook and close to new all-time records. NASDAQ just keeps going. I'll show you a little dip that basically was bought. Dow Jones and small caps not far behind. A couple of really just massive trades we did recently. One for solar, one for semiconductors, another nice beautiful breakout for FedEx, so stay tuned for that. We'll also look at junk bonds and treasury bonds. So throughout the presentation I'll be using my proprietary indicators. On this chart they are this green, blue, red and yellow lines. They are available for you if you're interested. You can get them at MasterChartsTrading.com. Sign up there and I'll open the door for you on TradingView.com. You do not need a paid TradingView account to have my indicators on your chart. So what do my indicators show and how do I use them? Normally I look at the basically support and resistance lines, and support and resistance are very important concepts in trading. So this is S&P 500 futures, and notice that back in February of this year, this is our actual exit alert, and I actually exited all of my positions in S&P 500. For example, I had some in my retirement portfolios on 25th of February. From then on there was a huge collapse. Now why did I exit there without any kind of insider trading knowledge? So the reason why I entered back in February 2019, right there where I'm hovering, is because my lines are showing me that I should be entering. In other words, the price has closed above the blue line back then, and it just continued higher, and finally it closed below the blue line back here. Now these lines are not just drawn there, they're actually mathematically calculated. The formula itself is it's closed, it's hidden. It's sort of kind of like I look at it from a point of view of proprietary information. So I can still share my indicators, the MasterCharts Trading Price Action 2.0 indicators. I can share them with you, but you will not see the actual code. You will only see the lines on your chart. And of course I explain how to use it. So in this case, what happened is support was broken basically at this time on 25th of February, and this is where I closed my position. Now from then on there were no good opportunities to enter on the long side. In other words, I want to see another close above the blue line before I commit to buying again, and that never happened. You can see that afterwards we had just this huge collapse into March. Now some people actually know a trader who caught this very bottom. He bought here, he bought calls here, and it rallied in his favor, so a huge gain. But to catch a bottom like this it requires a lot of experience. Basically you need to look at a lot of charts. I don't try to do that anymore. I try to just follow my lines. My lines are great for trend trading. So generally speaking, S&P 500 and generally speaking stocks have a bullish bias. They have a tendency of going up. So this opportunity back in 27th of March we basically ignored. I did not think I wanted to short stocks. I was absolutely correct, because just a few days later on the 29th of April you can see an actual breakout, and this is all I need to know. So on 29th of April the price of S&P 500 closed above my support resistance lines, and these lines have a very high degree of accuracy. I would say that, well, actually I have my statistics and I've been trading with these lines. 75% of trades are profitable. Only 25%, would have, let's say you entered on a breakout above the blue line and then it just collapsed against you. It happens, but it only happens about 25% of the time. The rest of the time I'm profitable. I'm able to make at least something, at least positive transaction. And of late, I've been just doing huge gains. There were several, I'll show it later, but there were several option trades. For example, NEO, I already showed it, NIO. So here's NEO. This one just huge run, over, because I bought an option and it went up from $1.27 to $9.75. But besides the point. The point of the matter is, what I'm trying to say is, these indicators, they actually mean something. These lines, they actually there's a meaning to them. You can see that the price, for example, here on 15th of June, it dropped right to that line. It just touched that line and rallied off of it. Now we're breaking out above the green line and very close to all-time record high. So to me, this is showing strong buyers, strong buying pressure, strong presence of buyers. Notice how interesting. There's the close above the green line from 14th into 15th of July, and then just kind of touched it from the top now. So notice that now green line is acting as support. Now, green line in general is a relatively weak support, so I try not to buy up here. I try to buy at the blue line, deeper pullbacks. So here's one such opportunity, for example, for NASDAQ, QQQ. So it was exactly the same thing, very similar. We had a collapse back in February. So if you were holding NASDAQ from way back when in June of 2019, then I would have exited right there on 26th of February and did nothing. Here potentially you would have shorted if you really wanted to on the 31st of March, but I would probably not bother with that, because look at this. Later on, just a few days later, 14th of April, there's the breakout above the blue line, and it never looked back. It just kept going. So also very interesting, notice how it just touches the green line. There's the touch on 27th of March. Another opportunity on the, well, this is not truly an opportunity. I'm just showing you how the support and resistance works. So the price drops towards support, and it is bought there. Again, price drops towards support here in June and bought there. And then the latest drop towards the support was on the 24th of July, and it just completely got erased. That little drop from the 13th of July into 24th of July, it disappeared, because yesterday a new all-time record high was set. And notice how easy it is. We just buy on breakout. We don't need to think of anything. We just buy it, and that's almost 30% gain. So Dow Jones, DIA, same general principle. These up arrows are basically alerts. This is already successful to me. If I had, for example, bought an option here, bought calls here, you would have already made nice money here. So you can definitely take profits, advance your stop, etc. So Dow Jones, very similar pattern to S&P, just dragging a little bit. Whereas S&P is already above the green line. Notice S&P is already above the green line. Dow Jones is still below it, still dragging a little bit. That doesn't mean it's not in a bull market. The bull market for Dow Jones started right there on the 27th of May. Here's small cap side WM, kind of similar pattern to Dow Jones. Several alerts here. Also up blue arrows are actual alerts. And there's your target today. You reached your target. This is a nice, already enough money to make, rather enough movement for the price to make money. Again, especially if you're trading options, for example. So very easy to trade once again. Couple of interesting trades recently. So here is solar. Of course, you never know which one will run and which one will not run. So for example, back here where I'm hovering on 1st of June, when I sent this alert, I had no idea it was gonna go that high. I knew it was gonna go up, but I didn't know how far it's gonna go up. At this point, on the 1st of June, I had 75% chance of at least breaking even, because we need to, once our target is reached, we advance our stop, we take profits, etc. There is a simple procedure I can teach you in 5 minutes, but sometimes we keep the position open and it just keeps running. Look how nice of a breakout. So your target was probably already reached right there on the 2nd of July, or was definitely reached in the 2nd of July. So at this point, advance the stop to your entry, and just keeps going. It just keeps going and going. That's 50% basically right there. So again, if you put options, that's easily 150, 200, 300% gain, just depending on how far the option was. Another very nice trade, XSD semiconductors. So a couple of alerts, nothing out of the ordinary. Again, same general principle. We just see, okay, there's a close above the blue line, and there's a close above the blue line. We just buy it, and we just buy it and we keep trailing. So as I keep saying, it makes more sense to trail at the blue line and just take profits. The reason being is because if you trail the entire position at the green line, for example, you would have been stopped out right there on 11th of June. So I trail at the blue line, and then instead of taking, closing the entire position when, for example, there was a pullback towards the green line, I would take profits here. But sometimes it just keeps going. So I keep noticing that the longer we hold stocks, the longer we hold various securities, the better the gains. So in this case, XSD semiconductors, simple trade, 31% gain. So another, just a good example of how I trade breakouts. So FedEx, very straightforward example. What I really liked about this trade is notice that FedEx, and I'm going back here quite a bit, it's been in a downtrend for a very long time. It's been in a downtrend since October 2018, so over 2 years. Notice it just kept going down and down and down. And yes, you could have shorted multiple occasions if you so desired. I usually shorted the red line if I even bother, and sometimes we have very nice gains. So yes, but lately I was just kind of watching it and I see, okay, this is breakout above the green line right there. I'm sorry, about the red line right there. So this is already showing some sort of an appetite, for risk by the investors, some sort of a upside pressure on the price. And then a few days later, right there, on the 8th of June, I'm like, okay, there's the breakout. We have a close above the blue line, and people keep asking, but what the heck are these lines, and why can't I just see the code? And I say, okay, think of them just like Coca-Cola recipe. It tastes really good, and you don't need to really know the recipe because it tastes good already. So the same goes here. You just follow it. You have a breakout, we just buy. So a few days later it went against us. We keep holding, doing nothing. And then there's that big run and a breakout, and actually on the 1st of July your target was definitely reached already. So at that point, simply advance your stop, take profits, or do nothing, just advance your stop. In this case, you could have just gotten away with doing nothing, because a few days later it just popped higher. And today, nice, beautiful candle to new records, or new 52-week highs here. That's a over 22% gain, and I think it will continue higher. So did you hear any kind of fundamental analysis? Did I mention anything about volume of packages or management shakeups or dividends. Or no, you don't need to know that. That's all you need to know is you need to look at the price action. If the price action confirms, and that's how easy it is right there. There's a confirmation of price action. 8th of June. Close above the blue line, we just buy. We put our initial stop at the yellow line. Once our target is reached on the 1st of July here, we advance our stop to either the blue line or the entry itself. And then we just keep riding it higher. Pretty straightforward, right? Very easy. Sign up at MasterChartsTrading.com. So junk bonds, I keep mentioning, junk bonds are important because they're basically stocks. They're like a notch above stocks. But junk, by definition, means low quality, and Federal Reserve is now buying these low quality securities. In fact, they specifically are buying this particular ETF, JNK and HYG. So I myself decided to go ahead and buy right there where I'm hovering, 22nd of May. I bought it into my retirement portfolios. Another opportunity to buy on the 30th of June. Very nice move as well. And I mean, I think, you know, the way junk bonds are looking, I think it's good for stocks, because stocks and junk bonds generally go in the same direction. They move together in lockstep. So if junk bonds are moving higher, stocks should be also moving higher. And that means that there is no divergence. And if there's no divergence, we should just continue buying stocks, basically. Here's Treasuries, TLT. So Treasury bonds, these are long-dated Treasury bonds. Now, intermediate IE of junk bonds are also important, because this is where the the interest rate for the mortgage is being set, and you can see where mortgage, or rather the Treasury bonds, are approaching all-time record highs. I personally have TLT. I actually bought it on the 11th of June, right there at 162.87. It already reached my target, and I already advanced the stop and actually took profits, and I'm still trailing it higher. So the bonds and the interest rates, they move in opposite direction. So if bond prices are going higher, then mortgage prices and all kinds of interest rates are going lower. So there's car interest rates, there's mortgage interest rates, and they could be actually headed even to the negative territory. How would that play out with mortgages is anybody's guess, but it is already happening in Europe, so I'm sure we can figure out how to work with negative mortgages. Overall, this is obviously not great, but you know, governments around the world are issuing debt, and people are buying it, investors are buying it. So you know, to me, actually, it makes very little difference what it is that I'm trading. I apologize, there's some noise in the back. This is just numbers for me, basically. You know, I'm buying excuse me, things that are going up. I'm not really worried about their name. You know, in this case, it's called Treasury bonds. So I'm buying them because they're going up. I'm also buying them because there is some, you know, fear in the markets. But my number one reason why I'm buying is just simply because of this pattern. So you can see that the price closed below the blue line right there, actually made a low below the blue line. It doesn't matter if it's a low or a close. And then a few days later, on 11th of June, right there where I'm hovering, it made a close above the blue line. So this is all I need. This is a second type of trade. So this is a pullback trade because the price is already above the blue line. So on a pullback trade, we'll need to do is make a low below blue and then close above blue. For a breakout trade, for example, for a FedEx, the price was recently below the yellow line, so in other words, for sure it was in the downtrend, but all of a sudden it came up and it broke out. So this is a breakout type of trade. But TLT trade, treasury trade, is a pullback, so because we already have a price above the blue line. So in this case, we just, it's already established. Uptrend is already established. All right, a little bit of a switch gear. So natural gas. This is natural gas futures. So I did trade it in the past. Not a great way to do it, because ideally you should have either a futures account, or if you live outside the United States, then you can trade this security, NGAS, MGAS, on FXCM. It's a contract for difference. I mean, if I could, I would have traded this, but in the United States you can't, unfortunately. So we are stuck with we're stuck with a what do you call it, UNG, and under no circumstances should you be analyzing UNG. You should always be analyzing the natural gas futures, because if you analyze UNG, look at the way the chart looks right now, and let me look at UNG. So UNG looks completely different. So you can see it's below the yellow line, just slightly popped up above the yellow line. So this means, what this is slippage. It slips. There is because it's composed of options, and there is decay. It's called theta, time decay. So always analyze the underlying, which is natural gas futures. Natural gas futures are showing me that up to very recently, we can see a shorting opportunity right there on the 6th of May, and it was definitely a downtrend, and this was a 20+ year low, if not all-time low. But then, nice big rally, especially right there, huge candlestick here on the 3rd of July, 3rd of August, and so far it's very close to the bullish level. So the bullish levels are right now at 2.353, and if it closes above it, I have no problem buying natural gas. So at that point, we can start buying calls on UNG, or just buying UNG in general. Not an ideal situation, but at retail level in the United States, it's probably the best way to trade it, to buy calls on UNG. That's the best I can suggest. But not yet, so we need to see a close above the blue line, which is currently at 2.353. Right, again, so let's switch gears. So dollar index, DXY, 52-week lows. But notice how I think it's trying to bottom here in the past few weeks, few days, few sessions here. We had a big drop, and I think it's trying to bottom here. So I think at the very least a small rally towards the yellow line at 94.27 is possible. Ideally, it should run even higher to like 96, and then we can look for a shorting opportunity. The reverse, is true for euro versus US dollar, euro USD. This one just took off 710 pips for these trades. Again, congratulations. And notice how it's just basically the opposite of DXY, because DXY is like 50% euro. So sideways trading right now, but at new 52-week high. So definitely bullish. Ideally, I want to see a pullback towards the blue line at 1.143 currently, but it may never get there. So we'll see how the price action comes up. Right now, euro feels a bit overbought. Here's British pound, also very nice move, 426 pips move here. From the recent trade. Again, congratulations. Notice how it's interesting. It's stalling at resistance, so green line resistance right there. But it could also overcome it and just continue higher. So no way to know. But DXY in general right now, it feels like it's about to do a little bit of a bounce. So this brings me to the precious metals. And the precious metals trade was just very kind to us. So this is again actual alert. In fact, I myself bought GLD. There's GLD I bought it on 23rd of March, took lots of profits. Finally, I closed my position right there, 27th of July. So let's see if I was right, because it actually overshot my prediction. So why did I close there? Let me show you. Mostly, so this is where I closed it right there, 29th of July. This would mostly had to do with silver, because silver, I mean, this is just a home run trade. Alert was sent on 15th of May. It did exactly, what I like stock to do, just kind of immediately go in our favor. Nice close above the green line right there on 8th of July, and it just exploded higher. 81% gain right now. I mean, it's at multi-year highs, so yeah, this is where I decided to close my position at 28th of July here. And yeah, obviously I was wrong. You can see it continued higher, but if you're holding on, congratulations. If you're, there's this saying, people who traders who are able to be right and sit tight are quite rare, and I'm right very often, but am I able to sit tight? That's a different story, right? A lot of things are dependent on the trader personality, and I'm noticing this quite a bit. So psychology of trading. Do you like to exit early? Do you like to let your losers run? Whereas in fact you should let your winners run. Yeah, you should always cut your losses. So a lot of psychology, and also a lot of emotions. So you can kind of think that, if you caught this rally, you'll think maybe I'm the greatest trader ever alive, and then you will bet your next trade will put more money than you should have put, and then this entire gain is wiped out. So yeah, you need to really watch yourself, really watch your patterns of thinking and also patterns of trading. So highly recommend you write down every single trade that you do. You just have an Excel spreadsheet. I actually have one. I can let you have it, Excel spreadsheet. And you write down every single line, where you entered, where you exited, and maybe even some notes of why you did what. So yeah, sometimes you get these huge trades, and then this is when you really have to watch yourself, because you become reckless. It's happened to me many times. So hold on to your money. This is a beautiful trade. Don't get reckless. Keep doing what you're doing. All right, just slowly increase your position size. And eventually, you will get large position size, and you can live off of this earnings. All right, and then let's come to an end to the presentation. Bitcoin versus US dollar. So there's the breakout. Again, I'm not making it up. On 29th of April, there's a close above the blue line. Another opportunity. You can see it touch the blue line. At 10th, 11th of May. I actually bought on the 12th of May at 88.52. Like an idiot, I let my trade get stopped out. I made like a little bit of money, but notice where it is now. It's 38% plus, in the gain. So I think it could like double again. The way cryptocurrency move, they just sometimes go crazy higher. So yeah, sometimes this happens, and don't beat yourself up. If you miss a trade, just continuously improve. So all right, so now that you have heard my presentation, please head over to MasterChartsTrading.com. That's MasterChartsTrading.com. You can also go to everyonecantrade.com. It will forward me here. Everyone Can Trade. It's my old website, but I'm thinking about resurrecting it. So right this instant, we still have this newsletter, trading indicators, and ultimate package, new stock screener, now you can actually find breakouts like I'm showing you. Things like FedEx. Nice 23% breakout. And how did I know it? It had a close above this blue line. So you can find this type of breakouts by simply signing up for the stock screener. You'll get these types of alerts. Right now it's limited to 100 tickers, but that's more than enough to start with, especially if you're a beginner, and then we can always increase this higher. And eventually I think I will reshuffle this a little bit. The newsletter most likely will be separated into ETFs, stocks, gold stocks, and maybe I'm thinking about introducing just I think I'm gonna call it juicy setups, because I'm seeing just really beautiful trades similar to like this one, NEO. I keep showing this just incredible trade, 403% average gain. And this is the type of trades I'm going to be looking for with the next service. Right this instant, if you are signed up for newsletter or the ultimate package, and I will have an upgrade to that juicy setups service, then I will upgrade you at no charge. So consider signing up right now, because I'm thinking about introducing this new level of service within a couple of weeks. So the prices right now would still be honored later on. So if you sign up for a newsletter or a ultimate package, I will honor the prices when I separate the services, what I just mentioned, where we have like just ETFs for the regular newsletter, and then we have like juicy setups where we have very stocks of this nature, and possibly maybe a separate service for cryptos, forex, and commodities. So right now they're all into one, but not everybody is trading everything. So I want to kind of separate them out and see which ones are more useful. So do sign up now. Alright, that's it for this week's recap. If you have any questions, please send them in. Thanks for watching, and have another great trading week. Bye bye.